Hi there, traders. This is Brad Gilbert with today's trading action. All right, now this week has been one of those sort of weeks that just drags out, right? You've got, and you can see here the price action. It's really undecided, right? We've had the euphoria of Trump after the elections. Everything's sort of calmed down, a little bit of a dollar correction, and now it is just sort of cruising sideways. And what I would call sort of uncertain markets, right? So dollar yen creeping topside, okay, as the BOJ sort of, you know, sort of said they're not in a rush to hike rates. Dollar CAD, where we've seen really strong Canadian inflation numbers. And then oil is sort of caught up, right? Oil's jumped up $2. So that sort of makes a little bit of sense. But the rest of them, it is sort of like a danger zone, right? Getting sucked into the markets when there's no real clear direction, right? And this comes down to the economic numbers. Just having a quick bo peep at the UK inflation numbers, okay, pretty much as expected, maybe just a fraction stronger than the actual forecast, right? But that didn't really see much go on, right? So the markets aren't interested at the moment. What traders are looking for everywhere is specific direction, right? And the US Treasury yields, which are driving the dollar strength, right? The short dated stuff is still sort of going up a little bit, right? The equity markets sort of flat to neutral at the moment or just down a touch. And that creates the uncertainty across the currencies, right? Once you recognize this relationship, you're going to be able to make trading decisions and actually a decision like, you know what, this doesn't look good for me today, right? And that's all you need to be able to do because if you can do that, then you know you can switch off and you're not missing anything in particular, right? So just be aware this happens quite a lot, right? This is the market. This is how the markets sort of work. They're not on every day. Now, the Fed, okay, 53% of a 0.25% cut, right? So that's borderline. That's going to be interesting with US numbers or the bigger US numbers. The Bank of England with those slightly stronger uh, CPI numbers, no change, 82%, slightly higher than before that release, right? So there's not a lot going on. Like the central banks have done their job, cool things down. What we're waiting for is, and this is like everyone, we're just waiting for one of these instruments to start trending, then it becomes a target, right? If it's the US dollar, we hit the majors. If it's a specific currency like sterling, then we hit the sterling crosses. That's all we're waiting for. Right now, I can't tell you with a hand on my heart saying which one of these would you be trading and which side of the market would you be trading? Because at the moment, I don't know, right? Because I'm not seeing enough to determine to make that decision. And that's probably where you should be coming back to. Learn the skills to read the market like that. And that saves you money, saves you worrying about putting trades on in the middle of nowhere and wondering what the hell is the next move. All right. Just relax. It's one of those weeks, and let's just see how it pans out from here. So just coming back to that data, right? There's not a lot going on. We've got the weekly jobless claims numbers out of the States, some existing home sales numbers, the Philly Fed Business Index. I like this number a little bit more. There's some bond auctions, treasury auctions. Okay, probably worth or may have some sort of influence over what's going on. And then there's not much else going on, guys. This is one of those days where, you know what? Take your dog out for a walk, play some golf, go to work, be nice to the family. All right, guys, good luck. Cheerio.